All right, good morning. It is Thursday, January 19th, 2023, and it's 9:30 a.m. Pacific Standard Time. So, yesterday, as I had mentioned, I got into the market. Let's see here. Go to a 4-hour chart. I got into the market, I think, somewhere around here. I bought put options, and you can check yesterday's update. And of course, the market went down. So I gained a lot of value in this, and I'm going to sell. Actually, I've got a pretty good profit on this, and I'm going to sell only because I have a feeling that the market might start correcting a little bit. Maybe come up in here and then turn around and go down. I'm not sure yet. I'll decide when I get off of the video here. But you know, that's how I get in and out. It's feeling, and I know I've talked about this before, and I've had people comment about that. If they go, "What do you mean feeling?" There's nothing tangible about a feeling. You know, this is all tangible right here. You can see it with your eyes, and so all the great traders that I know, and these are traders that you don't hear about, the people have been trading for 30, 40, 50 years, all of them use a feeling, because that's what it comes down to. And as far as getting in, how did I know this was the top? You know, you just feel it. How do I know when to get out? Again, you feel it. All these people are using indicators and moving averages and all that. Those are not accurate, even though they'll tell you they're accurate. What's accurate is 90% of the people lose in a stock market because they all fall for the same stuff. You know, they all fall for the bells and whistles and the different colors. And yesterday I was online, I saw this kid that was talking about he makes a living trading. And he was saying the bull market's back. And the way he was talking about the market, I'm guessing that there's no way he's making a living doing this, because everything he was saying was just the opposite of what I've been taught and what I do. And he's clearly a novice, a beginner, and there's a lot of these people like that. And he's using all the indicators and the moving averages, and he's using all that stuff. So I know that he's not making a living doing this. But the point is that when the market starts hitting the top, you get a lot of these people, just regular people, you know, that are trading the markets, and they think they're experts, and they're convincing a lot of people. And so people are putting their hard-earned cash money into the markets, and then they lose it. So what's the reality of this? The reality is, here's the reality. We're in a bear market. See that line going down? That's a bear market. This is the correction here, and during the pandemic in March, it just went straight down, and then it came up. That's clearly a bull market, right? It's going up, and that's clearly a bear market. This is going to be a bear market until the market starts coming up at least above this line. But you know, as the market comes down, it has to make higher highs. Basically, that's what it has to do. So right here you got, let's see. So right here you've got many bear markets and bull markets. Here's a bear market, here's a bull market. So when the bull market starts coming up, you got these highs, and these highs are higher, and the lows are higher too. When it starts coming down, it's the opposite. This high is lower than that one, this high is lower than that one, this high is lower than that one. So it's clearly a little bear market here, little bull market here within the longer time frame. This is a bear market. So anybody who's going to be buying stocks long term is probably guaranteed to lose money. in the long term, because this is a bear market. You don't want to buy stocks in a bear market. You want to buy stocks in a bull market. This is a bull market. So how are stocks traded? They're traded by demand. It doesn't matter if the company's making money or not. It doesn't matter about the economy. Clearly, this is the markets went down during the pandemic, the start of the pandemic, and they came up. So if the markets were very sensitive, very forgiving, and very concerned about human nature, it should have kept going down, not up. So a lot of people made a lot of money here, billionaires. A lot of billionaires are created just in this short run. So again, the market doesn't care if there's a war going on, doesn't care if there's a pandemic. It cares about one thing, it cares about money, making money. And I hate to say that, but that's the truth of this whole thing. It doesn't care if the stock's doing well, the company. If people are interested in the stock, it's going to go up. Not because of the company. It's going to go up because people are trading it. You know, there's a demand, just like real estate. Real estate prices go up, and they go up way beyond what they're actually worth, only because people just keep buying it. And that's it. So people are buying here, and now they're selling. Clearly, that's what they're doing. So again, I hate to repeat myself, but we're in a bear market. We are not in a bull market. This is not the beginning of a bull market, unless this is the bottom. So why would this be the bottom? Well, you know, bottom doesn't hit until we're actually, there's a couple things I had mentioned. I mentioned the VIX. You know, I kind of use that. You know, when the VIX is up here, then we're at a bottom. Okay, kind of use this. It's pretty accurate. I mentioned this before all the times that the VIX was up pretty high. 2008, the market went up here, and that's about right. That's about when the market hit bottom. And it took about a year and a half, and then it came down, and then as it's coming down, the market's going up. So that makes total sense. So where are we at now? We're right here. It's not the bottom. Bottom's up here. So we're far, 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 far from the bottom. And here's a Dow. And the Dow's come up quite a bit. You know, they're just really pushing this thing up. But now it's time for it to come down. Because, again, this is a buy-sell game. So people here are buying and people selling. But you need some more sellers in here. And this needs to come down and then pop back up for some buyers, and then sellers and buyers. And that's how this works. You have buyers, sellers, buyers, sellers. Now, whether the market's going up or down, you still have buyers and sellers. You have sellers, you have buyers. You have buyers here, you have sellers there. You have sellers down here, now you got buyers. Now, in the bear market, on the way down, you have sellers, and you still have buyers. You have sellers, and you have buyers. It's the same thing. It's just that the overall picture is down, so that means that the as far as physics goes, the weight of this thing is pushing down. Now again, you know, this market could come up and start into a bull market, but if it does, it's going to get very dangerous. It's already dangerous now. And that means when we do finally correct, because we always have corrections, it's just going to come straight down, and that's going to be too dangerous. And the Feds know about this, and that's why they're raising interest rates, because they want this thing to come down, stabilize, then come back up. That's how these markets work. Okay, so we're back. So why am I going to sell? Because I usually stay in about 2-3 days, and then I get out. It's not 100% because these markets are never 100%. So this market has a personality. It's like a person. And so a person is never 100%. You know, they'll have ups and downs, just like a person that has, that's bipolar. and that's what the markets are. Again, it's feeling. Now, this market could go down again because tomorrow's going to be Friday, the last day, and it's possible they could do that, or it could pop up here. And if it does come back up here, I'm going to buy again put options going down. So let's get the ES in here. So, okay, there's the ES, and the market's coming down. The market's gone from here to there, and it's corrected, which is good. Then it's come back up, hit this line, and now it's coming down. So I figure it's eventually going to come down in this area, but it's going to do some little corrections in between, and that's how I trade. You know, like I said, I trade for maybe 2-3 days, then I get out, wait for it to correct, get back in, and then down again. Now, another way to trade is, you know, buy here and just stay with it for a couple of months and just let it go down. It's going to zigzag all over, come down. You're not going to make as much money as what I'm doing, but you can definitely make a living doing that. You can make some really good money. I do this because I have a lot of experience, and I just capture all these little waves here, and it's fun for me, because I really get to use my intuition on this, and it's pretty accurate, as you can see from my past posts. So my game plan isn't set yet. It's only set for that day, sometimes the next day, and so for right now, it looks like I'll probably be getting out right after this video, and then I'll get back in. I'll see what happens during the day, and like I said, the market starts coming back up in this area. I'm going to buy some more put options for it to go down, and then I can double what I made here, you know, because I'll make some money. I already made some money here, but if it comes back up here, I'm going to lose a lot of that. And like I mentioned before, the way options work, even if it came up to break even, it's not break even. I could be down several $1,000s because I've lost a lot of time, and plus these options work off of volatility. And when this comes up here, you're going to have people pulling out, and they're not going to be very interested in this option anymore. And it's going to be worth less than what I paid for it, even though it's at break even. So that's why I trade this way. Again, I would not recommend that for somebody who's starting off, because it could be very confusing. This is the way to go. You can buy your put options here and just let it ride. You know, it could take whatever. It could take weeks, could take a month, and then decide when you can get out. And this market's pretty tricky as far as that goes, because you can see, okay, you've made 20,000 from here to here, and you're going to say, I want to make 20,000 more. I'm going to stay in, and then the market goes up. That's not the way it works. So whatever I'm doing on the short term, you do this on the long term, meaning that you don't want this to come back and correct up again, because it doesn't have to go all the way up for you to lose all your money or break even. And just take the profit. You know, it gets down here. Let's say you make 20 grand in a month. That's good. Just stay with that, and then wait for another opportunity to happen. Wait for another opportunity like this. Great opportunity right here. You know, wait for these spikes. These happen all the time. They're never gonna go away. So trading, to be successful in this market, it takes one thing, and that's controlling your emotions, or being aware of your emotions. That's it. You know, as far as all the indicators and all these people talking about this, none of that works in the long run. You know, all those people fail eventually. Like I said, those long-term traders that I know have been around 30, 40, 50 years. That's what they use. They use their intuition. They use their feeling, because that's the only thing that you have that's going to save you through this whole thing. But you have to learn what that means. So when you start getting a feeling, you start getting a stomach ache down here, your throat starts to hurt, it's not a good place to be in. You should feel good about this whole trade. When it starts coming down here and somehow it just does not feel right, I get out. There's no explanation to it. There's nothing that can tell me. There's no moving averages that can tell me what that means. But my body will tell me every time. Every time. Okay, so that's it for now. I'll talk more about this later. I'm always going to be talking about the feeling, the intuition, about how these markets work. It's about one thing, buying and selling. They don't care if there's a war going on or a pandemic or a president got shot. Yeah, sure, the market's going to go down. Market's here, president gets shot, sits down here, and guess what? It's going to drive it up even further than before. And that's what happens. A war ends, market goes down. This is in a bull market. If we're in a bull market and there is a war and it ended, the market would go down, or I'm sorry, the market would actually go up, and it would turn around and come back down. Because people are going to say, hey, now we can make some money going up. Then they're going to turn around because the money is exhausted and it's going to come down. Same thing here. If there's a war going on in a bear market, you're going to get the market going down. Well, actually, it doesn't really matter, bear or bull market. The market's going to go down because there's a war, and it's going to come right back up. Because it's not about the war, it's about making money. So, that's it. That's what drives these markets, is buying and selling. There's, people go long term, they're just buying. How can you make money just buying? You're only playing half the market. That's why they lose. You have to sell, and you sell high, or at least as high as you can. So that's what I did. I bought here, I bought some put options, came down here, I made some money. It's time to sell pretty soon, if not now, and then wait for it to come back up a little bit. If it does. If it doesn't and the market continues down, eventually it's going to retrace, and then I get back in. Always retraces. Look at this. These here, there's always retracing here. Okay, that's it for now. Talk to you guys tomorrow.